Personal finance practice problem using Excel. Personal financial statements. Prepare to get financially fit by practicing personal finance. Here we are in our Excel worksheet. If you have access to the Excel worksheet, would like to follow along, note that we're down here in the practice tab as opposed to the example tab. The example tab, in essence, being an answer key. Information on the left-hand side, we're going to populate that into the blue area on the right-hand side, putting together our financial statements, including balance sheet and income statement, which will, in essence, be on a cash basis, noting that no matter what we do, we're going to have to deviate from a cash basis from time to time. So I'll try to note those out when it happens, so be aware of that. So we're going to first label these up top, balance sheet and the income statement. So I'm going to go up top here. I'm going to call this a balance sheet. I'm going to try to go a little bit faster because this is going to be a longer type of problem. Balance sheet basis, cash basis. I'm going to select these three items or these cells, go to the Home tab, Font Group. We're going to go then to the drop down, making that black, and then the lettering white. I'm going to make that black and white for our header. Now, I'm not going to put the date range or anything because I want to focus just in on the numbers at this point in time. And then I'm going to have the income statement. Income statement, cash basis. Now, you might just call it a cash flow statement. If you're doing this on a cash basis for the personal side, you might see that. In practice, on a business side of things, we would typically have an income statement on an accrual basis, which would be a little bit more difficult to do. And then we would basically have a cash flow statement as well to complement it. But that takes more work. A lot of times we'll just want to try to have a cash flow basis on the income side of things because that'll be easier to do. Noting that, again, we would want to deviate from that possibly from time to time for certain things, which we will point out as we go. So Home tab, font group, black and white on that one too. And then we've got the I'm going to call it, this would normally be the statement of owner's equity, which would tie together the income statement and balance sheet. If we were to just put this thing together by basically constructing the balance sheet and income statement from our resources, from end sources like the bank statements and whatnot, then we won't have the financial books that we would put together, and this tying together would not be as relevant. But if we're doing the financial statements by entering transactions, then we would tie the balance sheet and income statement together by a statement of owner's equity, which I'm going to call net worth for the personal side of things, just to get an idea of how to do that on if you're doing actual personal bookkeeping, which you can do using something like software. So I'm going to go to the Home tab, font group, black and white here. Then I'm going to go all the way to the left. I'm going to try to color code these things. On the balance sheet, I just want to have assets green, liabilities orange, and then we're going to go to the income statement and make those blue. Those are going to be our color coding sequence. So I'm going to go up top. We got rent for the month. So that's going to be, I'm assuming we're paying rent. So I'm going to make that then, that's an expense. I'm going to right click on this, go to the bucket here, and I'm going to make that this really light blue. And it's blue because it's kind of part of the net worth or equity side. We've been using blue for equity on our balance sheet in prior presentations. Spending for food, that's like an expense. So I'm going to make that blue. We got the savings account. That's going to be an asset. So I'm going to make that green. We've got then the current value of an automobile, what our current value or worth of the automobile is. I'll make that green. Note that that's not as easy to determine because I have to have an appraisal for that or something like that, as opposed to the cash account or investments, which I know the market value for. I know the value of it. Then we got the credit card balance we could find from our credit card statement. Right-clicking on that, that's going to be then, we'll make that orange. It's a liability. We've got the auto insurance, which we're paying monthly. I'm assuming that's a monthly outflow. So I'm going to right-click on this and make that blue, noting that that's a prepayment for accrual accounting. And if I paid more than monthly, that's one of the problems that we can come up with a cash basis versus a accrual basis. The equipment, video equipment, I'm going to make this green because this is an asset. This is stuff that we have, which is difficult to value because we have to just kind of appraise the value, even though it might be older equipment. Lunches, I'm assuming we're paying lunches on a monthly basis. So it's other than food. This is other food, lunches. And then that's an expense. Personal computer, I'm assuming this is an asset that we're trying to put on the books as an asset. So we're going to have to value the computer, which again is difficult to do because it goes down over time. And then we got the clothing purchase. I'm assuming we're not putting this on the books as an asset, but this is the monthly purchase we're going to say for clothing. So we're going to spend this much for purchase of clothing. We're going to say the monthly take-home pay. This is going to be our income account. So I'm going to say income. Let's make this a darker blue, something like maybe that blue. And notice the take-home pay is a little bit tricky because when you look at your W-2 wages, you actually have withholdings from it for things like taxes and possibly things like putting money into a retirement plan and whatnot. So you could record your take-home pay as a net pay, the cash you actually get, or if you wanted to do the accounting where you basically break out the investments or, the withholdings that come from that, recording your gross pay, which would be on your paycheck stub, minus all the stuff they took out, including at least payroll taxes. Checking account, we're going to say this is our checking account balance. I'm going to make that green. We've got the balance in the education loan. I'm assuming this is a liability that we owe that we can, of course, check for the documentation from the loan statements. Telephone, we'd have to look up how much we pay for the telephone bill. I'm assuming that's going to be an income statement thing that we're paying monthly. We got the loan monthly payment. This is a tricky one because this is really, part of it would be an expense in the form of interest expense, and part of it would be paying down the loan if we were doing double entry accounting. But here we're just going to think of it as an outflow. So that's going to be one of the tricky kind of things. Then we're going to say the household possessions. These are other things. We could say our cooking ware and all of the expensive, dishes that we have because we've got really fancy silverware maybe or something. So we're going to say household possessions is green. Make that this green. And then we got the payments to the electricity monthly expense. We could get our bill for the electricity bill. Say we pay that monthly for electricity. And then we got donations that we pay to the donations, charities that we're giving. And then we got the value of the stock investments that we have. We can get that from our stock statement. That one is not an estimate as much, right? Because the market value would tell us what the stocks are if we're putting our money into market value stocks, as opposed to like our computer equipment or something like that, which we have no idea. Probably couldn't sell it if we wanted to. Then we got the restaurant spending, more spending here. We had food and restaurant. So notice we might want to break things out like that on the personal side, which we wouldn't do so much on the business side. Notice our expense accounts also, some of them might be more customized towards our personal needs as opposed to like what you might categorize them on the business side. And then this one, I'll deal with that a little bit later with the net worth when we get to our last statement. So now let's do some categorization. We're going to have our same categories: balance sheet, assets, liabilities, and equity. I'm going to actually create that one first, and then we'll go over to the income statement. So I'm going to say assets. I'm going to do our same convention for the coloring. I'm going to make this dark green by going to the font group and making that then this dark green, and then I'll make it green and white on the letters. And then I'm going to say we have the current assets, or we're going to call here liquid assets. Liquid assets. So things that we can convert fairly quickly in order to then pay off our liabilities if we need to. So we're going to be picking up things like the checking account. That's going to be number one typically. So the checking account had, where was the checking account? It's down here. So I'll pick up the checking account. So we got that one. And I might then just mark it off with some color down here and say, all right, we did that, checked off, check it off with that little thing. And that's going to be on the inner area. So that's going to be the 600. It's a subcategory of the liquid assets. I'm going to go to the alignment and indent. Then we've got the savings account. There should be a savings account up top right there. Let's pick that one up. Let's go ahead and alignment indent that. Notice I'm getting picky on the ordering because here I want the more liquid stuff up top. So the checking account usually first, then the savings account. So we'll pick that up. And then I've got the stock investments. Now, sometimes you might want to put your investments, when you think about your investments, you might want to put them in another subcategory, possibly in investments. I would think about them breaking out between the investments that are under an umbrella, like a 401k plan or an IRA, as opposed to those outside of that umbrella. Because if they're outside the umbrella, although they might be subject to taxes, and although you're planning on putting them in there for a long period of time, hopefully, that they're still fairly liquid. If you need to then sell them, you can. Whereas if they're in a 401k plan, then you want to make sure to put them in a separate category because you cannot access them at that point. So I would put any non-IRA investments, any non-401k investments possibly into a subcategory, which would be part of current assets or part of liquid assets. And so I'm going to call that the value of the investments. That's this one down here. So we got that one. And then I'm going to make this green right there. I'll make that green. And then we'll make this one green up top too. Let's make that green. And so let's indent that by going to the home, alignment, and indent. And I think that's it there. So I'm going to call this total liquid assets. Going to put that in the outer column. Do our trusty sum equals the SUM, shift 9, up arrow, left arrow, holding down shift, up, and closing that up. Let's put an underline here. Font group underline. Let's indent this 2 times. 2 times on the indent. I'm going to make this whole thing green. I'm going to make this gaudy color thing again. Home tab, font group, making that green. Okay, and then we have the non-liquid assets. I'm going to call these non-liquid assets. Note that I put up top the investments up here into kind of like the liquid assets. So you might have another category for the investments that you could still kind of access up top. And then I would bring up the retirement kind of investments in another category as well. Non-liquid here, I'm kind of comparing this category to what you might think of as property, plant, and equipment on the business side of things. So things that would kind of depreciate in value. Obviously here, these things are not being used in order to invest or in order to generate revenue. So they're not kind of the same type of thing, but they're still assets that will typically be going down in value over time, except for the exception usually be like a home where that will hopefully appreciate or go up in value. And these are also things that when you're thinking about your balance sheet, they're things that you kind of have to just estimate what the value is unless you're putting it on the books and purchasing something new, which is the only time when you actually know the market price. And over time, they will go down. So if you're not writing them down, depreciating them, devaluing them over time, then your financial statements will kind of be distorted. So what you want to make sure you're doing is breaking this stuff out separately from your financial current assets, especially because this current asset stuff is really the stuff that you have that you can actually spend on things. And that's why you want to kind of break this out. So we're going to say that we have the current value of the automobile is going to be in here. So we had an automobile. So we'll put our car on there. And again, we can't do anything with the car. It's going to go down in value except use it, right? We're not going to sell the car generally, although we want to have the value of it on there just in terms of our total assets, but not mix it up with basically our current assets is the idea. So we're going to say the car is going to be up here. I'm going to make it a different color because this is going to be a different section. Let's make this like a green type of color. So I'll make this a green type of color just to remind me. And we've marked this one off. So I'll put a little green check mark right there. Indenting here, alignment and dent. And then we've got the video equipment. So the video equipment, like I say, you can't normally sell it. You know, you're not going to be selling it most likely. And it's going to go down in value most likely. I'm going to go to the home tab, alignment, indent. So it's probably not going to impact your day-to-day decisions going forward, but it is something of value that, of course, you have, and you got to then periodically look at it and say, you know, what's the new value of it now, or depreciate it is what you would typically do on an accrual basis. Notice that that's an accrual kind of thing. When I say the current value of the automobile, that means I'm taking an appraisal at this point in time of the automobile and putting it on the books. And you might say, if I'm doing my books continually, well, what happens tomorrow or next month? Shouldn't it be going down in value? Because we know it will be. Normally you do depreciation, which is an accrual type of thing. And so if you were doing accounting on it, you'd have to then do some, even if you're on a cash basis, you'd have to do something accrual there. You'd have to depreciate it because on a cash basis, these things that we bought, if we bought them with cash, they would have already been expensed in cash and we wouldn't have them on the books here. So like I say, even though we're doing kind of a cash basis thing, these are kind of accrual concepts that we have that we're doing here because these things are being used by us, not like they are in a business to generate revenue in the future, but they're being used for personal wealth or happiness or whatnot. So in any case, we'll put that on the books. We're going to make that this color again too. And we'll make that this color. And then we're going to say we got the computer. So the personal computer is going to be here. Let's pick that up. This is going to be the 1750 and indent that. Home tab, alignment, and indent. And then we'll say we did the video equipment. Check that off. make this a different green. I'll make it all the way across this green to check it off. And then let's make this green. Okay, and then we got the personal computer and then the household possessions. The other household possessions, we're going to put that down here. And that's going to be the 4008. Again, like our silverware and stuff, we're not going to be able to sell the silverware or anything. And I don't know what the value of silverware is, but I'm going to make my best guess and put it on the books. And it should be depreciated over time and whatnot. That's going to be the total. So then we're going to say this is going to be the total non-liquid assets. Summing this up equals the SUM, shift 9, and adding that up. And so there we have it. Let's indent that 2 times. Home tab, alignment, indent, indent. And then we're going to basically make this font group and different color. So let's take, that'll be our total assets. Total assets. And we could sum up the outer column. Notice I'm only summing up one column at a time. So we're going to sum up the outer column equals the SUM, shift 9. And then I'm going to hit the up arrow and then scroll up. Notice I have a lot of empty cells there. That's okay. You could just add the 2 cells together, but I think the sum function is the useful function to use. I'm going to make this the dark green, like the first one was, home tab, font group, making this that dark green, and then having the white lettering. So now we'll go to the liabilities, which shouldn't be as long, which is nice. Liabilities, I'm going to make this a dark orangish reddish color. So we're going to go up top and go home tab, font, making this a dark orangish reddish, and then the white coloring for the letters. And then let's put a little, we had a check mark on this one. That one's done. I found all of the green ones are all taken care of. Okay, so now we're doing the orange ones. So now we have current liabilities, colon, to indicate that there's going to be a check for it, and the credit card is all I have there. Credit card, because I'm going to assume that the educational loan is long-term. So we're going to say the credit card. I'm going to bring that inside. Now, because there's only one, I could put it in the outer column instead of having another redundant subtotal, which only adds up one number. But I'm going to keep with our consistent formatting and add another redundant subtotal, which would be the total current liabilities, and put that in the outer column, which would be that 310. Let's underline the 310, font group, underline. Let's select this entire thing, make it orange by going to the font group, making it this orange, the brighter orange now. And let's indent these 2 by going to the home tab, alignment, indent, and then indent this one, alignment, indent again. Then we're going to go to the long-term liabilities, noting again that we have a student loan, which we're going to say that's over a year, but we're probably paying it off possibly monthly at this point. And that means that part of it would be current and part of it long-term. So when I construct my balance sheet, if I'm just constructing it for one point in time to try to make decisions on now, or to give it to a bank or try to get something like that, then that's fine, not a problem, whatever it is. But what I should be doing is figuring out the current portion of it, and then putting that up top, the current portion, the amount that's going to be due in the next 12 months, if there is any amount due in the next 12 months. But that's tedious to do from a bookkeeping standpoint, because as soon as you make the next loan payment, you could have a change in the current portion that's due because of the difference in interest and principal. So that's another area just from a bookkeeping standpoint that gets messy. So in theory, you want to put the stuff that's going to be due in a year up top and the stuff that's over a year down below. But if you have one loan that has an amount due within a year and some that's due over a year, then you've got this kind of messy situation that you have to deal with some way, either by just putting it down here and just noting, just realizing, or by doing formal adjusting entries periodically at the end of the month or something like that. So then we're going to say I could put this in its own category on the right-hand side, but I'm going to go down here, make another subcategory for the total long-term liabilities. And this is going to be equal to that 3001. Let's underline, home tab, font, underline. Let's indent, alignment, indent, indent again, alignment, indent. Let's go ahead, I check off this one with that orange. And then I'm going to make this one a different orange, a lighter orange. Let's make this one like this orange. And then that'll give us our total liabilities. Total liabilities. And I'm going to underline this one. Font group underline. Going to put a check mark here that we got it. Sum this up using the trusty sum function. Only the outer column now equals the SUM of the 3001 and the 310. That'll give us the 3410, making this that darker orangish red color. Home tab, font group, bucket, darker orangish red and white. And then the bottom line of this is going to be finally our net worth, which I'm going to subtract the assets minus the liabilities. The total assets minus the total liabilities equals, this is what we have, minus the liabilities here. And there we have it. Let's make that the dark blue by going to the Home tab, Font group, making that our, not dark blue, but this blue here. I'm going to check the spelling on it real quick. Long-term liabilities. Okay. So there we have that. Okay, so there we have it. Now next time we'll do our income statement. And so I'll break this up. Notice the income statement I made blue over here because really the income statement is telling us a story of how we got to our net worth, but that story is only going to go back whatever the period frame is, in this case being 1 month back. So the income statement is what has happened for the last month that helped us to get to this point in time, which is represented in total by the summary number of our net worth.